Alrighty guys, so in today's video we're going to be going through a trade that you could have taken. Today is a bank holiday, so for me there's no trading, but really nice price delivery. And I had all my analysis ready to go there, which we're going to draw up again, and we're going to go through how you could have executed this trade yourself. So for me, every single session, I trade mainly the London session. I look at the 15-minute time frame to start, and what I saw price was doing, we're actually sitting in this 15-minute bearish fair value gap. So we had this rally up during Asian session. What that actually generated was all this sell-side liquidity here, and it's what I call trend line liquidity, right? So we'll talk about that as we go along. If you've seen other videos of mine, you would know that I love this trend line liquidity. It makes for a good target, and it makes for low resistance liquidity, and you can see how we traded through that. So just before the first macro, which by the way is 150 to 210, that's the first one I'm looking at, we're sitting roughly in between this high and this low. Now, just so you know, this high here, guys, this is Asian buy side liquidity, right? And this low here is Asian sell side liquidity, right? So we're kind of sitting between the two liquidity points. Now, usually I don't like forming any bias when we're sitting just between, but the fact that we're sitting in this 15-minute bearish fair value gap gave me an opportunity to think, okay, maybe price is going to head lower. And while I didn't take this trade, it was tapered from start to finish. So what we're going to look at now is the 5-minute chart, and what we're going to do is we're going to actually narrow this down to a 5-minute imbalance. So see what I'm doing here? I'm actually narrowing this down. What this allows you to do is like pinpoint the price, and you can see how the bodies are respecting that zone, right? On the 5-minute chart, if I draw a line from this swing high to this swing high, there's also what's called SMT divergence. Now what that is, and I'll explain it, I'll get up the other chart here and I'll get up ES, right? Now, ES, the NASDAQ and Dow, they're meant to be correlated pairs, right? So if the NASDAQ is making lower highs, ES should also be doing the same. And when they don't do the same thing, it indicates something about price action. So have a look here. If we draw those highs out in relation to each other, there's this swing high and that swing high, give or take. But we could even use the extreme ones, and we can actually see quite clearly ES is making higher highs, whereas the NASDAQ was making lower highs between these two time points. What that suggests, guys, even though they're both going down, it suggests that the NASDAQ is more bearish because it failed to actually raid this high, whereas SMT was formed and the ES actually took out these swing highs. So that's another contributing factor to this trade if you did take it, and something to take into consideration in the future. If you've got SMT at the highs or at the lows, it could be a factor that you use to contribute to your trade. Now the 5-minute is not where I execute off. So if I was going to execute this trade, it'd be off the 1-minute time frame. So let's have a look there. And let's see what we see, right? This here is our 5-minute CB, right? So this here is our 5-minute CB, which you can see. And look how quickly this delivered, by the way. We're still live in the markets, and Asian sell side is very close. Let's just say that. So we got some SMT formed at the highs. Now, whenever I'm looking at price action, I'm looking at, is there a clear target? And see these three lows here? These three lows are a clear target. So if I drew a highlighter, that low, and that low, that's low resistance sell side liquidity. These lows down here are also low resistance sell side liquidity. What makes it low resistance? The fact that there's many traders out there that actually use these lines and draw these trend lines, and every time it bounces off, they're going long. Every time it bounces off, they're going long. So what does that mean? Below each of these swing lows, there's stop losses. And what do stop losses equal? Money. What's the target of the market? It's liquidity, right? Or money. So the market likes to target liquidity. It likes to target money. And these stop losses or these swing lows have a lot of money or resting liquidity there. And that's why the market absolutely obliterates that to the downside, right? So essentially, if you wanted to take advantage of this trade, let me talk through all the confluences. And if this makes sense, let me know. If you want more detailed explanations on each of these concepts, whether it's SMT or trend line liquidity, also let me know, because I'm going to have videos in the works for those specific things, right? Now I'm going to mark out all these PD arrays. And we're going to start with this big green candle here, which is a very clear order block, right? I'm going to mark that out in green. That there is what I call a bearish order block. Now, from this swing high to this swing low, right, whichever one you class, if I want to class this swing high to this swing low, I'm going to grab my Fibonacci and see where the optimal trade entry is. And notice the optimal trade entry is roughly here, right? Price returned to the optimal trade entry, generated this low resistance sell side liquidity, and then sold off from there, right? So again, we're building a narrative, we're building a bias. This is how you build a bias. And for me, you can see here, this would have only started on the 15-minute time frame. I wasn't looking at the daily, I wasn't looking at the 4-hour, I wasn't looking at the hour chart. It was the 15-minute, which is the bellwether chart, or the best chart that I like to use. And then also narrowing it down to the 5-minute and now to the 1-minute looking for executions, right? Just so you guys can see, I'm going to mark this out too. And this is your Asian sell side liquidity, right? So where can you execute from? I'm going to pause this. Like I won't speak, I won't give it away just yet. But where could you execute from in this zone, in this region here? Have a bit of a look, and there's probably many executions you could get. But have a bit of a look. Now I'm going to start charting these out and we'll talk through them. The first one that I like to see is this big bullish gap gets disrespected. This becomes an inversion fair value gap right here. So my inversions, I'm going to mark them out in orange. So how do you execute off an inversion? You can execute as soon as the candle closes or when price actually trades back in. So let's assume you went for a short position right here. Where does your stop loss go? Above this swing high or above this order block. And where's your take profit? Well, each of these swing lows, right, could be a TP or a partial level, right? Depending on what you want to do. So that's the first entry. Where's the second entry? Where's the third entry? There's so many here, right? There's this bearish fair value gap and volume imbalance right there that you can see. So you got your bearish fair value gap and the volume imbalance. You also got this big one here, but I like this one and this entry better, right? Because we're still up high in the move. While this still did work out and this still did technically work out, I would prefer to take trades from the upside. So you can see, guys, when we're in a low resistance market, you can see how the market actually trades towards those points. Now, one thing which I've talked about many times, which is crucial, is time. You got to use time to your advantage. So if I mark out the macro from 150 all the way to 210, right, that's 150. Let's make that a bit thicker. And then let's get another line for 210. Look at what happens during that macro. Do you get an entry to go short during that macro? Yes or no? Yes. Does the macro deliver to liquidity? Yes. Are there multiple opportunities to enter during that macro, not just one? Yes. So this is what I class as an A+ setup, because you've got all the supporting factors in terms of using the 15-minute, the 5-minute. You've got SMT, you've got an order block, right, and you've got a clear target. It really doesn't matter what's up here, you've got to have a clear target. That's the final piece of the puzzle. Yeah, you can have all these PDRAs, etc., but if you don't have a clear target, it's not a good trade. That's just my opinion. So you can see the clear target. Obviously now there's an accumulation pocket that we're forming here, right? And we just swept this level of internal liquidity, right? Which is quite interesting. Now, if I was in this trade and I was watching the market, I'd be watching both, right? I'd be watching ES and I'll be watching the NASDAQ. This here is the Asian sell side that you can see, right? So I'll be watching both price action charts. Now, if I just go back to one, I just want to review what we've done here, guys. We've talked about low resistance sell side liquidity. We've also talked about SMT, order blocks, inversion fair value gaps, and the fact that, you know, you start from a high time frame and you work your way down. Doesn't mean you have to start from the 1 hour time frame. It doesn't mean that at all, right? But what it means is that you start from something that suits you. For me personally, I showed you exactly what I do. I started from the 15-minute time frame and I said, okay, wait a sec. If we're going to react to the downside, it makes sense that maybe this fair value gap would be the place to do it. Now, why would this fair value gap be the place to do it and not up here or not down here? Let me show you why. If I grab my Fibonacci from this swing high to this swing low and I extend that across in time, where does this bearish fair value gap sit? Optimal trade entry. Now, I know people in my Discord love this. If you're watching from the Discord, you'll love this. We can use any price swing to get the optimal trade entry from. So we can use this whole price swing here, right? I'm just going to make that yellow. We can get the optimal trade entry from that price swing. We can also go from this price swing, right, and get the optimal trade entry of that price swing, which we've done here. So we've used OTE twice to frame the trade, plus a higher time frame perspective, plus a clear draw on liquidity, which is this trend on liquidity, and you can see how we trade past that so aggressively. So these are the moves you want to participate in, the really quick ones, you know, till you take profit within, you know, a short span of time. So even if you entered from, say, here with your stop loss above this high, you would hit your 1 to 2 relatively quickly within like 20 minutes, 15 minutes. You can see that, and obviously you can see how we've delivered even lower. So when you've delivered this far, guys, I'd be very cautious to take longs until there's something really clear that's actually developed in price, because at the moment I'm just watching to see if we're respecting the bearish PD raise, right? Obviously this was the move, right? So what I'll be watching for now, if you were in the markets, would be how we react in the next macro, right? The next macro is from 250 leading up to 310, and then obviously that leads into silver bullet, right? So just keep that in mind. When you've had a big run here, just be cautious of taking longs. Make sure your analysis lines up, and always have a clear draw on liquidity, right? Optimal trade entry, many PD rays here to enter from. So if you don't like the inversion, you can enter from the SIBI or the bearish fair value gap. I'm going to continue making these types of videos in the future, live execution videos, just so you guys can kind of see what the market does in live time, but also just after the fact. So if you're watching this today, for example, and you've traded this, or you've kind of watched and you've tape read, you can go back and review that. So again, if you've got any questions, feel free to let me know in the comments. Follow me on TikTok, YouTube, obviously. I've got Twitter, and I've also got Telegram now. They're all for free. The Discord's also available. If you've got any questions, obviously in the Discord, you can ask me there. Ask me questions on YouTube or on TikTok, and I'll try my best to get back to you. Everyone that's asked for a specific video, I'm doing my best to manage that too. I'm trying to incorporate those types of things in the market. So again, until next time, guys, I'll talk to you then.